Hello, and welcome back to Explain the Charts, your go-to channel for detailed technical and fundamental analysis. Today is October 24th, 2025, and we're breaking down the wild price action in Apple stock, symbol Apple. It's been a tale of two tapes this week, with massive bullish news clashing head-on with some significant bearish headwinds. On one hand, reports of surging iPhone 17 sales sent the stock to a new all-time high earlier this week, putting it on the doorstep of a massive $4 trillion market cap. Analysts at Loop Capital even upgraded the stock to a buy with a lofty $315 price target, citing material upside through 2027. This optimism was further fueled by news that Apple has started shipping its new US-built AI servers, a significant step in its infrastructure push. However, the market sentiment took a sharp turn midweek. A new EU antitrust complaint targeting Apple's App Store and operating systems has created significant regulatory uncertainty. This, combined with reports of mixed demand signals, specifically weak orders for the new iPhone Air model, spooked investors and triggered a sell-off. Now, let's look at how this news translated directly into the price action on the daily chart. If we zoom in on this past week, you can see the story unfold perfectly. On Monday, October 20th, we had this massive bullish candle, pushing the price up over 2%. That momentum continued into Tuesday, where the stock printed its new all-time high of $265.29. This is the rally that was directly correlated with the positive iPhone 17 sales data and the analyst upgrade. But look what happened on Wednesday, October 22nd. We saw a dramatic reversal, with the price opening near the highs, but closing down over 1.6%, wiping out the previous day's gains. This drop aligns perfectly with the timing of the EU antitrust news hitting the headlines. Let's switch to the 1-hour chart to get a more granular look at this rejection. Here you can see the steady climb on Monday and early Tuesday, followed by the peak right at that $265.29 level. The selling pressure began to build throughout Tuesday's session, but the real damage occurred in the first few hours of trading on Wednesday. We saw a significant gap down followed by consistent selling pressure throughout the day. The price eventually found some temporary support around the $258 level, where it has been consolidating for the last day. This price action shows a clear rejection from the highs, and the bulls have lost control in the short term. Switching back to the daily chart, let's identify the key levels we need to watch. The primary resistance is, without a doubt, the new all-time high at $265.29. Any bullish move will need to decisively break and hold above this level to confirm a continuation of the uptrend. On the downside, we have immediate support at the recent low of $255.43 set during Wednesday's sell-off. A break below this level would be a bearish signal and could open the door to our next major support zone. That next key support level sits around $245, which was the low point from the pullback on October 10th. Below that, the September low around $226 would be the next major area of interest for buyers. So, what's the outlook from here? Let's discuss the bullish and bearish scenarios. The bullish case rests on the powerful fundamental story of the iPhone 17 supercycle. If strong sales are confirmed, the market may shrug off the regulatory noise. For a bullish thesis to play out, we need to see the price reclaim the $260 to $262 zone and build a base for another attempt at the all-time high. The upcoming earnings report on October 30th is the single most important catalyst on the horizon. A strong beat on earnings and positive guidance could easily propel the stock through resistance and towards that $315 analyst target. Conversely, the bearish case is gaining traction. The rejection at the all-time high was technically significant, forming a bearish engulfing pattern on some timeframes. If concerns about EU fines, weakening services revenue, and a potential miss on iPhone Air demand persist, the stock could continue its slide. A break below the $255 support level would reinforce this bearish view. A disappointing earnings report next week would be the nail in the coffin for the short-term bull run, likely sending the price down to test that $245 support level. To recap, The situation is finally balanced, and we're at a critical inflection point. Your key resistance level to watch is the all-time high of $265.29. Your key support levels are the immediate low at $255, followed by the more significant zones at $245 and $226. The market is currently in a state of indecision, likely waiting for the next major catalyst. That catalyst is Apple's fourth quarter earnings report, scheduled for after the market closes on October 30th. The results and, more importantly, the company's forward guidance will almost certainly dictate the next major move for the stock. I'd predict there's a 60% chance we see choppy, range-bound trading between $255 and $262 leading up to that report. A positive report would reinforce a 70% probability of retesting and breaking the all-time high, while a negative report would give a 75% probability of testing the $245 support. Thank you for tuning in to Explain the Charts. If you found this analysis helpful, please hit the like button and subscribe for more content. Remember, this video is for informational purposes only and does not constitute financial advice. Always conduct your own thorough research and consult with a financial professional before making any investment decisions.